As Fed Chair's question and answer in front of the House on Capitol Hill starts, we are seeing a little bit of a comment that was a little bit more dovish. More specifically, Fed Powell said that many paths are possible when questioned about the possibility of a July cut. So that doesn't rule out cutting rates, which Fed's Bauman and Fed's Waller talked about on Friday and again yesterday, and that may be helping to influence the dollar yen to new lows in trading. I'll talk about the technicals that are driving this currency pair in this video, so let's get started. In addition to the dollar moving lower, we're also seeing yields move lower. The 2-year yield is now down minus 0.6 basis points. The 10-year yield is down minus 0.4 basis points. They were higher earlier in the day, so that is helping to push the price down to new lows. We're currently trading at 144.569, and that move to the downside is also taking the price away from a key technical level, two key technical levels. As a matter of fact, if you take a look at the move up from the May low to the high price that we saw in just yesterday's trade after the surge in the U.S. dollar before the ceasefire announcements and a rotation back to the downside, that move to the downside has taken the price the 50% below the 50% midpoint and also below the 200-hour moving average. That's a green line in this chart. Both of them around the 145 level, and that level up to 145.06 is now going to be close resistance. As long as the price can remain below those levels, the bias remains to the downside. The next key target on the downside would look toward is this level right here near the 144.36 level. That level corresponds with not only the 61.8% retracement of that move to the upside from this low to this high, but also the swing lows and highs, I guess, going back to this these dates in trading last week. More specifically, we had a swing high right through here, then we broke above that level, and we started to find support buyers against that level, not once, not twice, not 3 times, but 4 separate times. The price came down near that 144.36 level and found support buyers. So this level is going to be a key support level for the dollar versus yen. We could see support buyers against that level. Why risk can be defined and limited against the level, but if the price were to break below the level, it would open the door for further downside momentum. Conversely, if we do find dip buyers, then we could see a rotation back toward the 50%, back toward the 200-hour moving average. That's what's in play now. But the sellers are right now taking more control in the dollar versus yen. We'll see if that momentum can continue. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.